The banking industry is a crucial component of the global economy. While money changing and money lending may be as old as money itself, banking, as we define it today, can be traced back to the 15th century, medieval Italy. The world of financial institutions consists of high street banks, investment banks, insurance companies, finance companies, investment managers, and other companies that profit from the creation and flow of money. As financial intermediaries, banks stand between depositors who supply capital and borrowers who demand capital. Given how much commerce and individual wealth rests on healthy banks, banks are also among the most heavily regulated businesses in the world. Now, for some companies that are involved in the banking industry, HSBC Holdings is based in England. It has revenues of over $48 billion and has offices in 80 countries and over 250,000 employees. ICBC Bank has total assets of $3.62 trillion and it has base of operations in the People's Republic of China. JP Morgan was the first bank in the United States and is based in New York, involved in investments, asset management and securities. Lastly, BNP Paribas is a French bank and operates in 75 countries. The bank was ranked second among banks in the Eurozone. To review the current differences in the global banking industry, we consider two types of banks which are concentrated worldwide: systematically important banks and non-global systematically important banks. Depending on their classification, banks pursue varying priorities. For example, protecting priorities include managing reputational risk, enhancing cybersecurity, and meeting capital and liquidity requirements. Growth priorities include recruiting and maintaining talent, developing new products, and investing in technology related to customer channels. Political and environmental factors related to energy production, combined with new technology, will require new financial products. These are likely to encompass financing and fundraising support for large energy projects. By 2030, many markets currently labelled emerging or growth markets will have reached maturity. In Asia, Latin America, and Africa, a new set of high-growth markets will have taken their place. Global banks will be able to compete in these markets, but they will need to carefully navigate local needs and regulations. Technology is changing the payment segment of the banking industry at an extraordinary rate. Key developments include competition from non-bank payment service providers, offering services such as mobile banking, and the application of new models, as there is customer demand for quicker, cheaper, and more convenient payment. Threats include customers losing control of their private information as banks continue to share an increasing amount of data with each other. Luckily, a lot of funding is going into securing this information through better encryption. Furthermore, millennials may see less jobs available in the sector due to higher reliance on technology and algorithms. On the other hand, those who do manage to break into the sector will see higher salaries. The smartphone is becoming the foundation of the future of mobile banking, especially among younger customers who will wield financial influence in the coming decades. Non-traditional banking and peer-to-peer lending will empower a whole generation as smaller players are finally able to join the banking space. Good news for us millennials. Blockchain technology is at the forefront of financial debate and is being implemented rapidly across the sector. A specialization concerning the newly emerging technology is guaranteed to enhance hiring possibilities for new generations. Whilst nobody can predict the future, there are always ways to help guarantee a good one. For instance, stay well informed. There is always an opportunity waiting around the corner, and there's a good chance you'll read about it. Also, be adaptable. We live in an age of exponential change, so keep on learning and continue to find ways that will set you apart.